everyone. Welcome back to our webinar. I still see people joining, so let's give them a minute or two to settle in. Hey, Alba, welcome back. Hey, Edith. Hey, Marius. I don't know if I'm pronouncing your name right. Hi, Raul. Hi, Rich. Hi, Vico. Hi, Baku. Welcome back. Hi, James. Hi, Joash. Morning, morning, morning. I always forget you guys are in Europe. Let's wait for the rest. Hey, Kaylee. Welcome back. Let's wait for the rest to settle in. I still see the people coming in. Hey. Okay, the fact that you guys are saying hi back, I'm assuming my audio is working fine. Like I'm assuming my mic is working fine. If not, you guys would not be responding to me. So the other thing I want to check before we start is my screen. If my screen's working and you can hear me loud and clear, can you guys just let me know in the chat box so that I know that you're not seeing a blank screen? And I know that I'm not talking to myself. Okay, thanks, Rich. Thanks, Kaylee. I cannot see your screen. Okay. Just give me a sec. Can you see my screen now? Oh, nice. You're welcome, Albert. So Albert is saying the XAU USD worked out great yesterday. Hello, Harena. Welcome back. Let me see. Hey, Jacob. Welcome back. Okay, a lot of people from yesterday's here. Hey, Olin. Hi, Vico. Can you hear me? Hi, hello. Welcome. Okay, I still see people joining, so maybe a minute more. Hey, I'm glad you guys took that gold trade. I think I called a buy on gold, right? Or was it a short? I was saying that the 2000, there was a resistance on the 2000 area. I didn't take that trade myself, but I'm glad you guys, yeah, it was a long. I remember saying wait for the pullback and then get in for the long. Oh, okay. If you caught that trade, that means you must have made quite a decent profit from that, because that was a really nice risk to reward. I remember it was like playing back to the 2000 area. Nice. Good job. Good one, Albert. I didn't take that trade myself because I already had other trades running and I didn't want to over leverage my account. So I'm glad you guys took that. Oh, a ton of money. Nice. Okay, I see the attendance still, so I guess that's everyone that's joining for today. We're gonna start now so that we can cover more things. Let me just settle this screen. It keeps moving. Okay, we're good. As usual, we always start the webinar with a disclaimer. So the disclaimer that I have for you guys today, as usual, is that any opinion expressed in this presentation or on the following slides are solely those of mine and not necessarily those of Vantage Markets. Okay, so Vantage does not guarantee the accuracy or the reliability of the information provided here. Again, I always tell you guys that Vantage invited us as a third party education, like research education company to do this webinars. Okay, so whatever I'm sharing with you guys is basically how I got my account to become profitable and how I managed to grow my account and how I managed to find setups. It's not necessarily what Vantage is. It's not necessarily the same views as Vantage. Okay, so As a reminder, trading FX and CFDs, especially on margin, carries significant risk and is not suitable for all investors. Okay, so if you are going to trade, please do it cautiously and carefully. Please use proper risk management. Please, don't overstretch. Don't sell your house. Don't sell your kids and your wives or your husbands. Okay, just trade what you can and what you're willing to lose. Okay, don't overdo it. This is not a get rich quick scheme, like overnight scheme. Okay, that's I think the only thing that you can get rich overnight is probably the lottery. Like, other than that, trading does take time. That being said, I do know people who made 100,000 in a day, but that is just very high risk trading, which I do not recommend, because you can make 100,000 a day, you can also lose 100,000 a day. Okay, so that's that. Let's start with the webinar we have today. We're doing a Fibonacci extension. For those who attended the webinar last Tuesday, it was Fibonacci retracement. So we're doing extension today. This is part 2 of the 4-part series on Fibonacci. Extension is really easy. I think, if anything, it's easier than retracement because there's only 2 levels, whereas retracement has how many levels? I see a lot of familiar names. So if you guys can just let me know in the chat box, how many levels are there for Fibonacci retracement? Okay, thank you. Thank you, Rich. Thank you, Harena. Okay, yeah, it's much easier with the Fibonacci extension because there's only 2 levels. Okay, so our agenda for today is to meet the team as usual, and then we're going to start straight with the recap of Fibonacci. I write Fibonacci retracement extension. Let me grab my pen. I write Fibonacci retracement extension, expansion, and projection, but really we're just covering extension today and doing a recap on retracement. But expansion is what we're doing next week, and the week after we'll be covering projection together with Fibonacci confluences. So Fibonacci confluence is a combination of all 4 of this. So if you are joining any 4 of these webinars and you missed the others, I really recommend that you try to go and learn one of it, because when we go into confluence, you would need to know all 4 of it to find Fibonacci confluence. Okay, so today we're going to do Fibonacci extensions, and we're going to be combining different Fibonaccis together, which is the retracement and the extension. But we first need to learn how to identify Fibonacci extension first before we can try to identify or combine Fibonacci retracement with extension together. Okay, then we're going to move on to the live charts as usual, putting Fibonacci into markets. So a little bit about us. We are from Everest Fortune Group. We are an award-winning research team with a finalist for Technical Analyst 2019, 2022, and 2021 actually for the best. I know I always say I'm going to update these slides, but yeah, it's actually for 2021 as well. For best Forex and best equity research, we are certified Singapore FinTech company, and we do appearances for brokerages like Vantage for today. We do TV appearances and radio talks as well. Basically, I'm just trying to say we know TA. We're good in TA. We know our stuff in technical analysis. We also know fundamentals, but we focus a lot on technical analysis. Okay, so the team comprises of Desmond, who is our CEO. He basically taught us most of what we know about trading. Angelina, she is my colleague. You guys probably have never seen her because she only covers me when I'm either sick or I'm out of office, like I'm on vacation. But other than that, it's mostly me. For Vantage, I take you guys for Vantage. And that's me. My name is Cass. For those who don't already know me, I am an investment analyst here at Everest Fortune Group. I'm a profitable trader. I'm managing more than I need to update these slides. I'm managing more than close to $1 million now, actually, in my own personal account. So I've passed FTMO twice. I've passed my Forex fund size. For those who don't know, FTMO or my Forex fund is a prop trading test that requires you to be profitable within the month, and you need to be at least 10% or 8% for my Forex fund and 10% for FTMO. So 10% for a trader is actually I think it's okay. It's not bad. I mean, if you think about it, if you have 100,000, I would have made you 100 I would have made you 10,000 that month based on my track record. Okay, so my specialty is in identifying reversals through a combination of supply and demand, which is like support resistance, and Fibonacci confluences, which is what we're covering right now. We're gonna do part 2 of Fibonacci series. Okay, let's do a recap. I see Karena and Rich being really versed, because I know Karena especially, and Rich, I know you're always here as well, and others like Albert's been here for a while, has been following these webinars. I know Karena especially has attended the first Fibonacci series, like the first time I talked about Fibonacci. I remember seeing you there. So this is just a recap for you. But for the rest of you, if at any time you guys need to stop me and you have any questions that you need me to answer, I will try my best to answer. So don't be shy, just ask straight in the chat box. Okay, so we're gonna do a recap. I do not know what happened to my slides. It's supposed to be recap and then retracement. Like, I don't know why it's skipping. When I press next, it's 6, 8, 10. So where's my slide 7 and 9? Okay, it doesn't matter. The slides are not working great today, which is fine, because a lot of the important things or the key things that we want to learn is actually on the live charts. Okay, so let's just do a recap on Fib retracement. So Rich and Helena did great. I'm sorry, my handwriting's so ugly. Helena and Rich did great, and they managed to answer that there are 5 levels. Okay, I'm gonna go straight to the live chart since the rest of my slides are not loading. There's no point for me staying on these slides. Okay, I'm gonna go. Can you guys see my charts? If you guys can see my charts, can you just let me know in the chat box so that you guys are not looking at a blank screen. All right, thank you, Rich. Thank you, Olan and Baku. So I'm gonna get rid of everything here. We'll come back to this USD CHF trade. I'm actually in this USD CHF trade right now for a short, but we'll come back to that, why I think it's a short. Okay, so we did Fib retracement. We've already achieved that there are 5 levels. Can I just find out from the crowd if you remember what the 5 levels are? Oh, and thank you, Albert. So for those who are always here and was here last week, can you guys just run me through what are the 5 levels you guys remember? In the chat box. Neat. All right. Thank you, Rich. I'm glad. I know her and I would know this as well. 38.2. Sorry, I'm gonna write the percentages so it's clearer. I always write it here in case some of you want to take a picture. It's so much easier if you have a photo that you want to refer to. So it's 38.2, the 50%, the 61.8%, sorry, and the 78.6%. So the one thing about Fibonacci retracement you want to take note of is that there are 5 levels that range within the 0 to 100%. Okay, so these 5 levels are a 0 to 100, and let's put that into theory. Let's put it into practice. Why it's within a 0 to 100? Because when you spot a Fibonacci retracement, it looks like a V, right? This is the 100% mark, and this is the 0% mark. Okay, this is a starting point and an end point, and we expect price to move within this 100% or this within this 0 to 100%. Okay, so you're expecting this, like, and then from here it does whatever it wants. Okay, but you're expecting the reversal in one of these 5 levels within the 100 to the 0 to 100%. Okay, so that's why it's called a retracement. It's just retracing within the 0 to 100%. Okay, I hope that's clear. I'm trying my best to make this as simple as possible so that you guys will understand and you'll be able to explain to other people. I think the easiest way to learn something is to teach someone else. So that's that. To identify Fibonacci retracement, this is going to be an easy one, but I just want to test you guys anyways. Okay, which one is the Fibonacci retracement? Is it A, B, or C? Okay, I see a few answers coming in. Okay, it's A. Okay, actually it is A. It's A because when you see this and you see a reversal, you're expecting the reversal, the answer is A, okay? You're expecting the reversal to be within the 100 and the 0%, okay? You're expecting the reversal to go within this range and stop somewhere here and then do another reversal, okay? So that's the retracement and do the continuation, sorry. Okay, so the same with this one. This is 1, 2, and 3. I'm sorry, my handwriting's so nasty. Okay, this is 1, 2, and 3. Which one is the Fibonacci retracement within these three patterns? This is 1, this is 2, and this is 3. Can you guys let me know in the chat box? Okay, I think Rich and Albert got it really well. Olin as well. Kaylee. Okay, I think everyone got it. Kaylee, Olin, Rich, Harana, of course. I already expect you to be a pro in this. And Jacob. Okay, so everyone got it. It's very obvious. It's just within the 0 to the 100. So that is how you identify a Fibonacci retracement. Let me just save this and get rid of everything else. Okay, there. Okay, now that we have identified what Fibonacci retracement is, this was a recap. We are now going to learn about Fibonacci extension. Fibonacci extension is different from the retracement. Retracement means it's going to retrace within the 0 to 100%. So the 5 levels are always within a 0 to 100. It's 23.6, 38.2, 50%, 61.8%, 40, 78.6%. Okay, Fibonacci extension is different, whereas it is above the 100% level, okay? So Fibonacci extension only is above, sorry, is more than 100%. Okay, so there are two levels for Fibonacci extension. Two levels. I'm sorry, why did I put that? Okay. Two levels for Fibonacci extension, and those two levels are 127.2% and 161.8%. Okay, so these are the only two. That's why I said it's easier for a Fibonacci extension because there's less levels to remember as compared to the 5 for retracement. There's only 2. Okay, so I mean, if you think about it, if this is the line, you're expecting the reversal. Now I want to ask you guys, which one do you think the Fibonacci extension pattern looks like? This is 100. Your starting point is 0. Sorry, yeah, your starting point is 0. This is 0, 100, 0. Which level do you think the Fibonacci extension is? Okay, we've got answers coming in. Got 1, 1, 3, 2, 1, 1, 1, 1. Okay, the answer is 1. Okay, why it's 1 for those that is like for those that haven't caught this yet? Why it's 1 is because Fibonacci extension are the level that are extended over, hence the name extension, Fibonacci extension. It's an extension over the 100% level. Okay, so for it to be over 100% level, it needs to look like a Nike tick. You see that? This is the 100% level. It needs to look like a tick, like a Nike, you know, like the shoe brand. Nike tick, or the other way is inversely, it needs to cross the 100% for it to be a Fibonacci extension. Okay, so the two levels that we focus on are the 127.2 and the 161.8. Okay, so just remember, Fibonacci retracement looks like a V, but the end, the second part of this V is shorter than the first part of the V. Okay, that's all you need to remember. Fibonacci extension, because it is above, it is an extension over the 100%, it looks like a Nike tick. It looks like a tick, okay? That's all you have to remember. It's, yep, that's it. That's all we have to learn about Fibonacci extension. We took like 5 minutes. It's super easy. Okay, the hard part now is you need to train your eyes to be able to identify it on the charts. Like, I can show the charts to 10 people and I'll be like, okay, spot the Fibonacci retracement, spot the Fibonacci extension. Probably only 1% or 2% will be able to identify it. It's not because it's hard to identify, it's because people are lack of practice. Okay, so let's try to identify the Fibonacci extension on chart. Before we move on to identifying Fibonacci extension patterns, I just want to find out if anyone is confused, because I do not want anyone to be moving on if it is confusing. If you guys have any question, like, this is the time. I'm going to give you like a minute to like type your question in the chat box. If you have anything at all, you want me to repeat anything or it's not clear, I think it's fairly simple. Everyone good? All right, it's been like 20 seconds. No one's saying anything. I'm assuming everyone is good. Okay. All good. Okay, thanks, Kaylee. Okay, let's move on to identifying the Fibonacci extension first. Well, let's just train our eyes to be able to catch the Fibonacci extension first, and then we can catch the Fibonacci retracement, and then we combine the both of them together. And then we see how when both levels line up in the same area, it makes that area very strong support and resistance. And that's usually where you enter for a reversal. That's where you enter for the sell, you enter for a buy, whatever it is. Because when there are two levels or more Fibonacci levels lining up in the same area, it means that area is a strong support and resistance zone, and it will be hard for price to break that zone. So I'll give you an example of a very hard zone for price to break. I think it's gold. Gold was having a hard time breaking the 2000 area for the long time. That means there's a very strong resistance there. And with the Fibonacci levels, you will be able to identify that the 2000 is in fact a very strong level. Okay, so let's move on to different time frames to see if there are any. I don't see any here. Market is going sideways, so obviously there's not going to be a Fibonacci anything here. Okay, let's move on to a different chart. We can come back to the USD CHF because I do have a trade running on that, and I'm gonna show you guys why I think it's a good trade. Okay, I see a Fibonacci here. Can you guys just let me know, what do you see? Do you see a Fibonacci retracement or a Fibonacci extension when you look at this? USD JPY. Okay. Okay, there are two answers coming in. One says a retracement and one says an extension. I actually did not catch the extension initially until I saw you guys say extension, and I'm just like, what are you talking about? I don't see any extension. Now I see the extension. See, that's the thing about being able to train your eyes. You need to train your eyes to be able to catch this pattern so that it will help you in your trading. Okay, so this is the Fibonacci retracement. For those who answered retracement, I'm assuming this is the level that you were talking about. Okay, this would be the 0, the 100, and this would be the 0%. And true enough, if you take the Fibonacci tool, you plot it from the swing high, you plot it to the swing low, and you click on the 5 levels that we're talking about, it will line up within this 100 and this 0. Okay, so this is the Fibonacci retracement where I was initially identifying, and I now also see a Fibonacci retracement. Okay, so I'm going to get rid of all of this. For those that were saying Fibonacci retracement extension, I'm assuming you're talking about this. Is this what you were talking about? Because this is the only retracement extension I see. If you see a different extension, please let me know. Yes, okay. So this is a Fibonacci extension. If you take the Fibonacci tool again, from the swing high, you pull it to the swing low, get rid of the settings for the retracement. You only want to pull out the 2 levels for Fibonacci extension, and you see that it will line up nicely, and you see how price came. I'm just gonna remove this really ugly, badly drawn tick. Okay, you see how price came, did a reversal, went straight up to the 127. Do you see it? It touched the 127.2, and then it just started to reverse. Do you see that? So this is for me. I'm not sure how other traders use it. I'm sure we all use it the same way, but for me, how I use Fibonacci is to identify reversals. So once I have identified these reversals, people would usually get in here for the sell. Okay, you're using Fibonacci to identify very strong support and resistance so that you can get in for the sell or the buy. Okay, so good catch for those who said Fibonacci extension. I'll be honest, I actually initially did not see the extension until you answered, and I was like, what extension? I don't see it. Okay, now I see it. It's right here. So you have to be able to train your eyes to catch these patterns, because these patterns will help you. I do see another pattern here. It's called a zigzag pattern. This is Fibonacci projection, which we'll not be learning today. We'll be learning that in 2 weeks. Next week is expansion, which is also a zigzag pattern. Okay, so good job, guys. We managed to catch our first combination. Let's look at different time frames. Okay, again, do you guys see a Fibonacci retracement or an extension? Guys, do you guys see a Fibonacci retracement and extension for this? Okay, thank you, Rich. Thank you, Joash. Thank you, Annie. I think the answers are coming in slower. I'm like, oh, why isn't, okay, thank you, Rodi. Yes, there is a retracement here. There's a retracement here. Okay, so we need to first train our eyes again. Thank you, Olan, to catch the patterns before we can do anything else. Catch the patterns first, then move on to other things. Okay, we need to like strengthen our basics first. Okay, so there's a retracement here. This would have been no, this was not. This was a double top. Okay, okay, so there's a retracement there. This would have been an extension. Okay, let's assume, let's do a replay. Let's say that hasn't happened yet, and this is where price is at. This would be an extension. This can be a longer extension, but this is a better extension. Why I say this is a better one? Because price did this already, kind of did a zigzag already. So you should take this swing high instead, and this is an extension, and this would have probably been 161 maybe. Nope, it broke the 161. Okay, that's fine. Okay, so yeah, you need to train your eyes to be able to catch all of this. Let's move on to a different time frame. Let's do a few more practice. Okay, do you guys see a Fibonacci retracement or an extension? This one is a tricky one, actually. Okay, thank you, Baku. Thank you, Rich. Yes, it is a Fibonacci extension. Thank you, Kaylee. Do you want to exit this mode? Yes, I do. Okay. Wait a minute. Oh, okay. No, this is the latest price. Sorry, that already happened because I was on the replay mode. Okay, but yeah, if you said extension, you would have been correct here, because as long as it crosses the 100%, it is called an extension. It doesn't matter by how much, it is called an extension. Okay, this is now a retracement. This is a retracement, and we're expecting price to reverse one of these levels. Okay, so let's this is a retracement, and now it's approaching the 78.6%. Is it going to reverse here? I don't think so. I don't think so. Okay. Let's go back to that first chart where there was both the extension and the expansion, because that was a very good example. Okay, sometimes when you look at a chart, there may only be one Fibonacci. It doesn't mean that that chart is not good. It's just better when you can find more. Okay, so let's do this. This is the 15 minutes. This was the one that we were looking at before, where there were both a retracement and a little tiny extension here. Okay, so oh wait, before I move on, I just want to find out from the crowd if you guys want to go through more charts looking for extensions and expansion. Oh wait, extensions and retracement, or are we good to try to do the application now? Is everyone good, or should we go through a few more charts? You guys can let me know in the chat box. You don't have to be shy. Don't worry. I won't. If you need more practice, I won't be mentioning your name and you feel like you're burdening the team. Okay, everyone, Rich, Jacob. Okay, a lot of people are good. James, Annie, a lot of people are good to move on. So we can move on. Okay, first, again, identify the retracement and then the extension. Okay, so let's do that. We found the retracement. Let's project where we think price will go. Okay, my next question is, now that we have found the retracement and we have plot our 5 levels for the retracement, can you guys let me know in the chat box which levels do you think is the most relevant to current price right now? Okay, thank you, Rich. Thank you, Baku. Thank you, Kaylee. That's right. The 78 is the most relevant. Why it's the most relevant? Because price has already cut through all of these other levels, meaning that price is not respecting these levels. That means price is just like, the 50% doesn't do anything to me. I'm just gonna cut through. If it respects those levels, when it reaches those levels, it would have done a reversal. Okay, but because it didn't, it means that price does not respect those levels and we should get rid of them. If price don't respect those levels, we're not going to use them. Let's get rid of all those levels. Okay, let's get rid of this ugly drawn lines. Okay, now let's use the Fibonacci tool again to find the extension. Again, the extension levels are 127.2 and 161.8. So anything other than those two levels, get rid of it. I'm gonna ask again, which level do you guys think is most relevant to current price? The 127.2 or 161? Okay, thanks. I love that you guys are able to answer. It just means that you guys are understanding and you guys will be able to practice this on your own. So thank you, Baku, Rich, Kaylee, Jacob, John, Muhammad, James. Okay, so we're gonna get rid of the 161 because it's not relevant to us. It's too far. Like we want the one that is closest to us. Okay, so now that can you guys see how the 127.2 and the 78.6 actually lines up very closely to each other? It means that this is a possible resistance zone. Okay, so we're gonna highlight this level. That means it's a resistance zone. So how I test, usually when I find a strong resistance, if at the end of the day we achieve that this is in fact a strong resistance, it means that we will, where is my brush? Okay, it means that we will be able to enter here for a buy or a sell. Can you guys let me know in the chat box? I want to know, I want to make sure you guys are still following. If this is a good resistance, we'll be entering for a buy or sell. Okay, sell, that's right. Why we're entering for sell is because if it's a strong resistance, it means price will have a hard time breaking it. Okay, look at it, price is trying to break it right now. Okay, price is trying to break it right now. We'll see what happens. This candle is going to close at 4:45 Singapore time. Okay, if price is able to break this, if price breaks this and there's a super green bullish candle, it just means that price does not respect this zone either, and it is not a sell from here. Okay, so we'll just wait for 4:45 to see what price does. Okay, okay, now that we have identified that there are two levels, Fibonacci levels lining up here, the 78.6 Fibonacci retracement and the 127.2 Fibonacci extension, what we're going to do now is try to line these things up I mean, usually I will look for other things like Fibonacci projection and expansion, but because for the sake of this webinar and today's topic of Fibonacci projection, we won't be touching expansion and projection, okay? So once that we see that there are two levels lining up here, the next thing we want to do is get your horizontal ray, because we're going to go look for swing highs and swing lows that lines up in this area as well. So now that we need to weigh how strong this resistance is, there's two things. There's two levels already lining up here, Fibonacci levels lining up here. The second thing that lines up here is an overlap resistance. I'm going to change this to resistance. Okay. Why do I draw a horizontal line here? Is because there is a swing high right here, okay, and there is a swing low right here. Do you guys see that? Do you guys see that they are actually prices rejecting here? So price came here and rejected. It did a reversal. Price came here, just touched the level and then did a reversal. Do you see that? Okay, so not only is there two Fibonacci levels lining up here, there's also a horizontal overlap resistance here. This is called a horizontal overlap because it touches both a swing high and a swing low. Okay, so it overlaps a swing high and the swing low. Guys, I'm not even kidding you right now. Do you see that candle? It looks like it's rejecting the resistance. Do you see that? It looks like it is respecting this resistance. This candle price right now is acknowledging that there is a resistance here, and it looks like it's having a hard time breaking. Why do I say it's hard time breaking? Because it's starting to wick. It wicks means it goes up and comes back down because there was not enough strength for it to break through. Okay, so earlier on it was wicking, but we don't know for sure until 4:45 when the candle actually closes. Never enter when the candle has not closed, okay? Because this candle could end up being a super long bullish candle that would have been a really strong breakout here, okay? If you see a weak rejecting reversal candlesticks, you should be okay for a sell here, because it seems like price is saying, okay, I acknowledge that there's a resistance here. I'm gonna turn back. I don't have the strength to break this resistance. I'm gonna turn back. Okay, is that key level? Yes, this is a key level. This is a key level. Okay, so let's wait for 8 more minutes to see what this candle does. If we see a reversal pattern, I will tell you guys should be okay for a sell. Okay, but if it closes like this super green strong candle, we're gonna move on to the next chart. Okay, so how well does Fibonacci, which time frame should I use? Okay, Fibonacci works on every time frame. Okay, it works on every time frame. The first time I started trading, the instructor was telling us how he used to trade the Fibonacci on a 3 minutes and a 5 minute charts. He was a scalper, and he used Fibonacci and it worked out really great. Okay, so is reversal and CH chalk same thing? Sorry, what? Sorry, I'm not very familiar with chalk. CHOCH. Should I Google this? let me see. Maybe it's something I'm not familiar with. Just give me a sec. Change of character. Oh, okay. Is reversal and chalk the same thing? How do you know? Just give me a sec. Okay, I'll come back to you in a while, Rody. Let me just answer Baku. Okay, I cannot properly answer you, Baku, because this is something I'm not very familiar with. It's something I honestly didn't. I've never heard of this until you typed it here. The correct way to trade using chart. Okay, thanks for letting me know. I will be researching on this. Okay, why there are still things when you ask me that I don't know about. Is because I use a fixed strategy that works for me, and it works for me. It's made me very profitable. It has made me very, very profitable. So I stick with my strategy, and I don't actively go out to learn more things because I don't want to confuse my strategy and confuse myself. It's the same reason why, for those who attended my fundamentals yesterday, the same reason why when I trade, I try not to read fundamentals, because there are times when my technical analysis is saying it's a short, but fundamentals is saying it's a long, and it's confusing my technical analysis. Okay, so I try not to take external things to confuse, but I do think I do read up on things. I read up just, oh, okay, it's just good to know. I'll just read up just for the information. But most of the time, I just stick to my already working strategy, which is catching reversals through using Fibonacci confluences. So I catch a lot of reversals on that, and it's made me a healthy amount of profit, and that's what I stick to. But I do know stuff. Yeah, I will be reading on chalk or change of character to find out what it is though. So thank you, Baku, for letting me know. How do you know when to TP and get out of trade? Okay, thanks for asking that, Rodi. So that is a very good question. So the first thing you want to do is find your entry. So once you have found your entry, your possible entry, right now we need to see if this is really a sell by waiting for the candlestick to close, right? So if we finally found that this is a sell, the next question is, where do we get out? Okay, I mean, you're in now. The next question is, where do you get out? Okay, so I usually get out at the next zone. I get out at the next support or the next resistance. So the next very obvious support or resistance for me would be right here. It would be right here. That's the most obvious one I can see. I mean, there are a few more support and resistance along the way, like here. But then if you're only gonna play it until here, that's like playing one candlestick, and then you might as well not play it. So why, when you have already identified your entry, now you need to ask where you're gonna get out? Because if your exit is too close from your entry, then you have to ask yourself, is this trade worth taking? If it's such a short trade, is it worth taking? Is it worth the risk if I'm basically not making much anyways, right? So usually I'll play to this level, because although I see all this, I think it's not as strong as this one. I really don't think it's as strong as this one, and it's too close. That's basically just one candlestick. So this would be my exit. This would be my exit. This is a 15 minutes, by the way. Usually it's on a 4 hours. So my trade would take half a day or 1 day or 2 days to play out. But on a 15 minutes, it's probably going to take like 1 hour or 2 hours to play out, or maybe like the next candlestick will play out. Okay. Okay. Once you have identified where you're going to put your take profit, the next thing you're going to ask yourself is, now entry, do I enter immediately when the next candle starts forming? You enter when the last candle closes, and you agree that that candle is in alignment with your biasness. So right now, our biasness is a sell. We're hoping that candle rejects here, and then we can enter for sell, right? But you need to wait for this candle to close and tell you that it is a sell. So for the candle to tell you, it's usually a reversal stick candle or a very strong rejection or a doji or whatever it is. You will know that it is a rejection. So like this is a very strong rejection. Let me find other forms. This is a like a hammer, this is a spinning top, like all this are all reversal pattern candlesticks. The candle is already signaling to you that, hey, I'm good, I'm gonna do a reversal now, I'm good, you guys, you can enter for sell if you want to, but you have to wait for this. So it's not so much of waiting, it's not so much about the next candle forming, it's not about the focusing on the next candle, it's more focusing on this candle closing before you make your decision. Honestly, if this candle closes like this in the next 1 minute, I think you should be okay for a sell, because look at the amount of rejection that is happening. It looks like price is rejecting and saying that, okay, I'm not able to break this area. Okay, so if it closes like this in the next 1 minute, actually 6 seconds. 5, 4, 3, 2, 1. Okay, yep, that is exactly a candlestick reversal pattern. Are you gonna go in? I would go in, but right now the account, where's my phone? The account that I'm trading is my client's account, and I already have trades running, so I won't be taking this trade. But if you guys want to take this trade, there are good signs that it is a sell. Again, whenever you want to enter a trade, you need to back it up with evidence of why you think it's a sell or it's a buy. Okay, one, because we have agreed there are two resistance level here. There are two Fibonacci levels here. There's a horizontal overlap resistance here. There's a strong rejection candle here. Okay, that's 4 indication that this is a sell entry right here. I mean, if you get it wrong, it's okay, because you're using a system, you're using a calculated system. It is all calculated. You have enough evidence to say that it is a sell. And if you get in now and it's wrong, at least it's you didn't just go in because you felt like it was going to short. I would have put my stop loss up here just above this candlestick, because if it is not able to break this zone the first time, I think it will have a hard time breaking. Okay, so we'll see how that works out. We have 15 more minutes. We already see some bearishness. Hopefully this one plays out. Shall we move on to the next chart, or is everyone in and now panicking? Do you guys have any requests for the next instrument? Guys, if you guys are not entering into contemplating, I just need to remind you, enter at your own risk. Enter at your own risk. Only enter if you agree, okay? So I'm gonna leave this one here in case for those who have already entered. I see people saying entered, I'm in for the sell. Okay, for those who are not, that's okay. Don't have to follow, no FOMO. Only enter because you agree, not because everyone else is doing it. Okay. Let me just try to make you a bit more confident for those who are already in this. Okay, all the other indicators are not saying much, which is fine. I just price action is king. Okay, so even if the indicators are not saying much, you need to know price action is king. Price action is support, resistance, whatever we just did, the Fibonacci is all. The priority should always be price action. Indicators are just there to back up your bias. Okay, for those people who trade based on indicator alone, like I have to say, I personally don't know anyone who is. Divergence on the RSI. Hey Helena, are you talking about USD JPY or something else? Oh, nice. Okay, nice. Oh my gosh, I so want to go grab my phone so I can enter this trade too. I actually really think this is an okay trade to enter. Okay. I've already got a trade running for USD CHF. Oh wait, AUD USD CHF. So I'm not gonna enter that because I don't want to over leverage. This is discipline, guys. This is why. This is how you grow your account. Okay. It looks like just one look, just based on the look. Okay, I'm not basing on any evidence at all. Just based on the look, it looks like a rejection here, and it looks like the sell is starting. Okay, so that's what it looks like, but we need to back it up. We need to back it up to see if this is really what's happening. Okay, so first things first, I do see a trend line. This could be the new trend line. So trend lines are very subjective. Some people will say this is how the trend line should be drawn. Okay, this is how the trend line should be drawn. If you drew the trend line this way, then this is a trend line. This is a trend line breakout. Okay, this is already a trend line breakout. But seeing how price is back within that trend line, I don't think this is a trend line breakout. I just think that the trend line should be drawn another way. Okay, so it's very subjective. So you should only use trend lines as a guiding principle, okay? Only use this as a principle, like a guiding principle to see where your general direction is. Don't use it for your major decision making. Sometimes there really are trendline breakout pullbacks, which I love trading. I love trading the trendline breakout pullbacks. They work really well, but for this case, I think that was not a breakout. I think the trend line was just can be drawn differently. Okay, so I see a descending trend line. Again, disclaimer, this could be drawn this way and people would see this as a breakout, but I'm not gonna do it this way because price is back in that trend line again. It's back within that zone, so it's signaling to me that the trend line can be drawn, should be drawn a different way. Okay, so we have a trend line. Now let's get rid of this. I don't know where that came from. Get rid of this. Okay, we now need to identify the Fibonacci retracement or extension. Okay, I almost got out of topic. I forgot our topic today is Fibonacci. I wanted to go all out with my indicators and my whatever other stuff. Okay, so guys, based on the latest price, do you guys see a Fibonacci retracement or do you see a Fibonacci extension? Extension. Can you see how USD JPY is doing? Hold on. Oh, it became bullish. Yeah, we'll just see how this candle closes. Again, if you get it wrong, it's okay because you got it wrong based on calculated risk. There's one thing you need to remember when you're trading. There are traders, I've actually seen someone who made $10,000 a day. Oh, wait. I know someone who made $10,000 or $20,000 a day, and she was just trading based on, oh, I feel like the charts is gonna go up. I feel like market is gonna go up. I feel like it's gonna go down. Okay, so she won based on luck, and eventually, because you're playing on luck, you can win one time, two times, three times, but eventually the market will show you who is the one that's using a real system and who got lucky. So eventually she did lose all her money, and I can say this for sure because there were times where I started the week with negative, 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 but because I constantly just keep using the same system, eventually my account just turned positive. Okay, so because you're using a system, you need to remember that this is just statistics and probabilities. It's just probabilities. Out of 10 times of using the same system, how many times do you get it correct? If it's more than 5 times, you get it correct 6 times, that means you're gonna bound to be profitable, right? Okay, so that's how you should be trading, using statistics and using probability. If anything, I do have a bias that this is a short and the short already happened. Okay, so this was the Fibonacci extension. Her and I seeing a Fibonacci retracement. I don't see a Fibonacci retracement. I only see an extension. So the extension that I see is from here to here, right? This is a Nike tick that I see. I don't really see a retracement. If you see a clear one, do highlight to me, because again, we're all humans. We're all just using our eyes to catch these patterns. I may not be able to catch the from the last one. From the last one. Oh, are you talking about this one? Okay, so why I don't take this as a retracement is because the pattern isn't that great. It kind of did a zigzag already before it did this. So it's not really a V anymore. It's more like a W now, right? So I won't take this as a retracement. I'll only take it if it did this, but it didn't. It did this instead. It did a W instead of a V. Okay, so I only see an extension. We'll just take that extension. I'm not even gonna ask. I'm sure all of you will agree that the 127.2 is closest to where current price is. This is crazy, man. I mean, you see how beautifully Fibonacci works. It came up, came to the 127, and it immediately did a reversal from there. Okay, do I think you can still get into the trade? Honestly, I think this trade has sailed. I wouldn't get into the trade. I think this trade has sailed. Okay, I think it's gonna go to the 123.6. Oh, it already broke the 123.6. Okay, so why I thought it was gonna go to the 123.6 and bounce? It's because there's a strategy. There's a strategy where a lot of traders use. They look for the 127 Fibonacci extension. They enter for a short from the Fibonacci 127 and they play it to the 23.6. So based on statistics and probabilities, a lot of times, maybe out of 10 times, 7 times that you enter from the 127.2, it actually goes to the 23.6 and then does a reversal of 23.6. So most people, or at least the trader around me will enter here, play it to here, and then enter here for a buy. Okay, but I'm also guessing why you shouldn't be buying from here and why price is still going down is because there's also a descending trend line here. So there are other factors when you're deciding a trade. Okay, this is one of the factors. Yeah, that's that. I think this has sailed. What does scalping mean? Okay, scalping is basically trading on a very short term. Okay, it's just like getting in and out of the trade very quickly. Scalpers are usually people who trade the 5 minutes or the 15-minute chart or even a 3-minute chart. They are basically a super intense day trader. Yep, so basically smash and grab. That's right. So day traders are people who trade within 24 hours and swing traders are people who trade more than 24 hours. As long as your trade is holding more than 24 hours, it means you are swing trading. Okay, so for this, if we saw this chart like a day ago, I would say this was the entry, but right now it's already at this area. Will it go down some more? That's the question, because there is a support level here. Okay, price might just reverse from here. It might. Okay, it might, but there is a 38.2% Fibonacci retracement here. Oh, Harana, actually, you're right. There is a Fibonacci retracement. You are right, Harana. There is a Fibonacci retracement. It is here. It is forming right now. There's always a Fibonacci retracement. Do you see that? I'm sorry, I didn't catch this earlier on, but yeah, there is a Fibonacci retracement. Is literally forming right now. Okay, so you take the swing low to the swing high and you pull out your 5 levels. And this is possibly where price is going to head to. Okay, obviously you can remove the 23.6 because price already broke the 23.6. Right now, price is headed for the 38.2. The question now is, will price break and go to the 50% or will it reverse? For the 28.2, I will give it a bit more consideration because of how it lines up nicely with the horizontal swing high right here. If it went to the 50%, I won't even question. I would, like, my bias would be like, yep, if it goes to 50%, it's definitely going to break the 50%. Why I would say that? Because nothing else lines up at the 50%. Like if I put a horizontal line here, there's nothing that lines up here, right? But when I put the horizontal line at the 38.2, it actually lines up very closely or nicely to this swing high. So there's actually 2 things saying that, okay, this is a key level for the support. But for the 50%, if it breaks the 38.2, I'm just like, okay, it's not gonna do anything when it reaches the 50%. I mean, that's just the bias. It might or might not, but I'm just more confident that it will just break the 58%. And then when it reaches the 61.8, that's when I will consider whether it will break or reverse again, because the 61.8 actually lines up nicely with this swing low. Okay, does that make sense? I hope that makes sense. I have run out of time. I hope you guys are able to understand Fibonacci retracement and extension. I will see you guys next week for the Fibonacci expansion. Fibonacci expansion are the levels below 0%. So it the levels when you click on the settings, it's negative, I think it's negative, yep, it's negative 27.2 and negative 61.8. okay, so those are the two levels we'll be exploring next week. Oh, my alarm rang to remind me not to overshoot, because every time I overshoot, this webinar just automatically turns off. I was talking halfway yesterday and it turned off on me. That's why I didn't finish my sentence. Okay, so I'll see you guys next week. The next webinar I'll be taking you guys for is Thursday. Guys, if I talk and this thing just turns off, it's because we're out of time. Okay, thank you so much for those who wants to join me on Thursday. We're doing live analysis. On Thursday, we basically focus on looking for setups. Okay, we focus on the live charts and we focus on looking for setups. Oh, okay, it looks like it's not rejecting anymore, but that's okay. We'll see how it goes. If you're wrong, that's okay. I hope everyone, for those who took this trade, you did use proper risk management. Okay, you're not risking a lot. Okay, so thank you, Rodi, thank you, Rich, thank you, Herena, thank you, Kaylee. It's so nice seeing you guys back here. Albert, Alessandro, Baku, Edith. Oh, Edith, welcome back again. Gofaim, Histro, Herena, Jacob, Kaylee, Lorenzo, Marius, Olan, Raul, Rich, Stanley, Vico, Joash. Okay, there's so many of you. The list keeps going. So for the rest, I'm not mentioning. Annie, Jessica, Muhammad. I'll catch you guys tomorrow. Okay, I'll catch you guys tomorrow. Oh wait, sorry, not tomorrow. Thursday. Thursday for the live analysis. Okay, bye guys. Take care and stay safe. Let me just turn this off. Okay, bye.